All right. Well, I've got noon my time out here in California, so I guess we'll go ahead and get things started. So, once again, good afternoon, and I just wanted to take this time to thank everybody for joining our new Harvesting Value webinar series. Our goal with this monthly series is to provide you with information and resources that'll help you make the best decisions for you and your operation. My name is Fred Dixon, and I am the head of strategic products here at American Ag Credit. To give you a little bit of information or background on myself, I grew up in central Pennsylvania and basically followed on a small cow-calf operation and followed my career across the United States. For the last 13 years, I've been with the system, with the farm credit system. I started out, my first 4 years was with CoBank, and the last 9 years was with American Ag Credit, where I've had a variety of different roles, from heading up the leasing program to being the head of regional banking for what we call the coastal region or Southern California, to the current role that I have today as head of strategic products. So I do live in Roseville, California, which is just outside of Sacramento, California, with my wife. We've got 2 adult children and 6 grandkids. So enough about myself, and a little bit more about American Ag Credit, what we've got planned for you today. As one of the largest farm credits in the one of the largest farm credit associations, we have a key perspective into the changing landscape of agriculture. At American Ag Credit, we've got the most diverse portfolio in the farm credit system. And what this allows us is to be able to adopt and evolve best practices and innovations across different types of agriculture. For more than 100 years, we have been serving the financial needs of farmers and ranchers in our area. And since most of our farmers and customers don't live in barns, we know that there's needs that also include rural home loans. Our new partnership with Rural First offers tailored lending options for lots, land, construction, and home loans. Today's presentation will give you an overview of loan options available from Rural First, how to get started with loan application, and what documentation is needed to start living your dream of living in the country. Today's presenters are Anna Young and Bobby Wimsatt. Anna Young is a senior loan officer with Rural First and serves Central and Western Kansas marketplace. Prior to Rural First, Anna worked at American Ag Credit for 10 years, serving in various roles, including underwriting, lending, and business development. Anna resides near Cheney, Kansas, with her husband and 3 daughters. Bobby Wimsatt is a senior Rural First loan associate that serves the Colorado and New Mexico markets. Prior to Rural First, Bobby worked in the personal finance industry in various roles such as lending, business development, and leadership. Bobby currently lives in Starlight, Indiana with his wife, Hillary, and 2 daughters. With that, I want to thank you once again for joining us today, and I'll turn it over to Anna and Bobby.
Thanks, Fred, and good afternoon, everybody. We're happy to be on this presentation today, and talk more about Rural First and what we have to offer. Fred already gave me a nice introduction, but my name's Anna Young, and I do cover, my territory is the Kansas footprint for American Ag Credit. So that's the area I serve with the Rural First products. Bobby, do you want to say a little bit more about your role specifically as well?
Yeah, absolutely. Again, Fred, thank you for the intro. That was a better job than I'll do, I'm sure, but appreciate your time. I have worked in the New Mexico area for a couple years now prior to the merger with American Ag Credit, and then most recently started covering a large portion of the Colorado market as well after July 1st. So very excited to keep moving west.
So Rural First, so who is Rural First, right? Rural First is part of the farm credit system, just like American Ag Credit. And we offer specifically consumer focused loans for American Ag Credit's customers. Rural First is also utilized by other farm credit associations as well. On the next slide, there's going to show a map and everywhere here you see in green is farm credit territory that uses Rural First for their consumer solutions. So like Fred mentioned, our customers, we serve a lot of customers and they don't live in barns, they need houses. So Rural First has a really nice footprint that we serve to make sure we can make those dreams come true. Today we're going to cover on the next slide, we're just going to talk about our 4 core products, and Bobby and I will go through each one of these that are listed here. So Bobby, I'll let you take it from here.
Yeah, thank you, Anna. So again, we offer 4 core products here at Rural First on the consumer division, and to help serve your all's needs as well. We've got our construction loan for home loans, property improvements, things like that. We have our home loans for purchases or refinances. We have our lot loans where people would buy a piece of property with the intent of eventually putting their home on that piece of property. And then we just have vacant land loans, whether someone uses that property for hunting, fishing, riding 4-wheelers, whatever that might be. So first, we'll go over our construction loan, which, to be honest, is probably my favorite product. And I think for a couple of reasons. One, it is just so competitive in the marketplace. And 2, it's very, very unique. So we do offer a one-time construction close. What that means is you get a fixed rate at closing. You do not have to worry about what your rate is going to be once your home is done. You are already locked in, and we offer anywhere from 10 to 30-year fixed rate options. We do allow borrowers to select a general contractor they're choosing, or in some cases, they can self-contract the build if they are qualified. Now, there's some limitations to that, but we try to make it work where we can. In addition to flexible terms, we also have a low down payment requirement of 15%. The cool thing is you can also utilize equity in land that you already own. So we have a lot of customers that bought land, 4 or 5 years ago, and with the way property prices have increased, they have built a ton of equity. So we have a lot of customers today that are able to build their home with little to no down payment at all. If that's not the case, if you are buying a piece of property and building your home all at once, that's okay too. It would be 15% down on the longest term. After closing is another unique or competitive advantage I think that our borrowers really find useful. Is we have a software that we use called Built, and we have an entire construction team that's dedicated to servicing the loan post-closing. So during construction, you have someone assigned to your loan. They can answer all of your questions, no matter how complex they are. And the Built software offers a lot of visibility to both the borrower and the lender. For example, when the builder will request draws off of your loan to fund the build, not only will the lender approve it, but the borrower will as well. So the borrower can ensure that the draws are appropriate for the work that's been completed, and we will also set up inspections throughout the process. One thing that kind of slipped my mind earlier is because we have a one-time close, there is only one set of closing costs. When you look at other lenders, a lot of times they have 2 closings, which just means 2 sets of closing costs. So we're able to save quite a bit of our cash right up front. I think that's going to lead us into our next loan product.
Yeah, so like Bobby said, and to build off the construction piece, we also offer, if there's an existing home, right? You're not building a house, there's already a home on the property. We finance those as well. I would say probably one of the most important things that really sets us apart compared to other consumer lenders is going to be that we do not have acreage maximums. So, and that has to do because we're in the farm credit system, and a lot of the people we're working with, that's, they're either involved in production agriculture or they want to live a rural lifestyle that includes more acres, right? So we have a lot of flexibility there if there's an existing home on acreage that you want to purchase. So I get a lot of questions on that. I get a lot of questions on, people are looking at maybe they're looking at several properties and they want to, they get nervous about things need to fit in a certain box. So all of our loans, we hold all our loans in-house. We're not selling anything off. And so we have a lot of flexibility from that standpoint to make things work, because we're not trying to make it fit in a box that we are going to sell. We do, if you're in that bucket where you're looking at various properties, we do offer a pre-qual option to get the ball rolling. So pre-qual, it's, hey, I want to get pre-qualified up to a certain dollar amount. I'm looking at 5 various properties. We have that available for people to get going, and give them that flexibility while they're shopping. Same as on construction, we offer variable and fixed rates. In this day's market, basically everything that we're doing primarily is a fixed rate, just given where, overall rate market is today. And then we also do offer variable rates though. Probably the other thing along with the acreage piece that I feel like when I'm talking to people is the most valuable to them is that we have the ability to finance certain types of homes that may not fit in a traditional secondary market lender's bucket. So barn dominion, I know you can read the slide, so you can see all the ones that are listed out there. At least here in Kansas, in the market that I serve, I feel like barn dominion is the one I get for sure the most questions about, hey, what are your options when it comes to financing barn dominions? But, in certain parts of the American Ag's territory that have, uses roll first, log homes may be more common. Maybe as you're getting into Colorado, specifically berm homes, shop homes, etc. So we have a lot of flexibility there to finance those types of properties. Same as constructions, it's as low as 15% down. And we do not require private mortgage insurance. So, and that applies to the construction loan as well. I know that wasn't specifically stated on that slide, but it's the same. So if you're at 15% down is what you're putting into the purchase, like in this situation, we don't require PMI. And that's because we're holding those loans in-house and we're not selling them out. I know I mentioned the acreage cap. One other thing too that I feel like I talk to a lot of people about is like I'm making a loan right now and it's 20 acres, an existing home, but they know in the future they're going to have the option to purchase another 20 acres next to it. And we have that ability too, because it's to finance that in the future, because it connects to it's contiguous to their primary residence. So they have some flexibility there. Or if they're wanting to, finance other improvements and use that equity in their home to make that done, such as, sheds or livestock facilities, etc. So there is a lot of great options here with these. One other thing I'll point out too before we move on is just, and back to Bobby's slide on the construction, roll first is very heavy on the construction side. I think about 40% overall of the loan volume that goes to roll first, about 40% is construction, and then we make a ton of home loans obviously as well, but very heavy on the construction side. So, and I think we're ready for the next slide. Okay, so lot loans, and when we say lot, don't necessarily think of just a traditional style lot. A lot for us could be 20 acres or 40 acres, depending on where you're at. But the biggest thing you need to remember here is that we can finance the bare land if you're going to build a house in the future on that bare land. Okay, so that's the qualifier there. And we have some really good financing options to make that happen. So if you're looking at a bare piece of ground, again, gonna build, we do not have a build time frame requirement. So if you're thinking, okay, it's probably gonna be a year or two, maybe 5 years before you build, that's fine. We can get you into a fixed rate product, a fixed rate type loan, for that land purchase. And then when it's time to build, you can roll it into a construction, or you don't have to roll it into a construction. We can leave it as a standard or a set-alone loan. Term wise, same thing. We do as low as 15% down if you want a 15-year term, or we can do 20% down with a 20-year term, or 25-25. So there's some flexible options there. For best terms and rates on the bare land piece, you're typically looking at credit bureau score above 700. One important thing on this too is that, and Bobby mentioned this earlier as well, but you can use that equity in your land for your future down payment in your construction loan. And that's definitely in the top 5 questions I feel like I get on a weekly basis is just, hey, is that an option when I do want to build in the future? And then, we are a rural lender, so we can't lend everywhere. And we do have some flexibility in smaller towns. If the population's under 2,500, we do have the ability in certain situations to make loans, but typically everything we're doing is going to be rural and outside the city limits.
think that's gonna bring us to our land loan product. So this is very similar to our lot loan with a couple small differences. Again, pre-qualification is definitely available for people that are still searching for multiple properties or looking at multiple properties. 10 to 25 year fixed rate options. Again, we still offer the same adjustable rates as well, or true variables. But as Anna mentioned right now, and given the rate environment, our fixed rates are typically what we're seeing borrowers take advantage of. First of all, there are very few lenders that offer fixed rate land loans, whether it's a lot or just some sort of recreational property. And if they are offering some sort of product to purchase those pieces, the majority of those are on an ARM. So we feel, and what we've seen so far in your all's marketplace, that this is a very, very competitive offering. Again, the down payment is going to match the term with the exception of the 10-year term. It's still going to be 15%. The difference here on the land loans is it is not going to be a requirement for the borrower to build or have the intent to build a home in the future. This could be, again, a piece of property where somebody just wants to go hunting and fishing on. I had a customer in New Mexico that bought a little over 600 acres, and he doesn't intend to build a house there. But he wants to have a place where his family can go and have like family reunions and stuff, and things like that. So we were able to finance that all day long. The one difference here is we need to have at minimum 10 acres of bare ground, like open ground, or 15 acres of like mixed use land, whether that's open and wooded. Typically what we see is 15 acres or larger on the vacant land loans. And what Anna had mentioned back on the lot loans is we can go below that 15 acre mark. As long as it's outside of city limits, there really is no acreage minimum or acreage maximum. So the land loans are a bit different in that regard, but that's about it.
One more thing on the land loan piece. Really, what we're financing there too is properties that are not true agricultural type properties that would be financed by your ag lender with American Ag Credit. So the properties, sometimes it'll be a fully wooded property, right, where there is no ag income potential is what we'll see there. Or they do want to build, like Bobby mentioned, in the future they're going to build some kind of structure. And so, but just to separate that piece a little bit as well.
Yeah, these are not typically income producing properties for us.
Correct.
So you guys have heard a lot about our products and what we offer. Now it's how do we get you from a purchase agreement all the way to the finish line. And here at Rural First, we have an entire team of over 200 people just in one location here in Louisville to make sure that you get, from the very beginning stages of looking at properties all the way to, servicing your loan. So we have a completely dedicated customer care department that can answer any questions throughout the life of your loan. And as Anna mentioned, these are not properties that we finance and resell the mortgage. We are going to keep this in-house. And if you ask me, I think that's a really good thing because we are really great to work with. But as far as our customer care department, they are top notch, as well as our construction team too, to help the complex builds in your area. We can make sure that we provide you with great customer service after closing as well.
So I just wanted to recap on here a few of the highlights too, as far as with our products. And these things apply to all of our products that we talked about. So construction, home loans, lot loans. Number one, we have an easy conversion program. So we have it's a flat fee to do a conversion. So for instance, if we're closing on someone's loan today, 12 months down the road, they can exercise a conversion instead of having to do a refinance. So today our conversion fee is $750. So it's very affordable. And then there's no limit to the number of conversions during the life of your loan. They just have to be 12 months apart. So it's a very nice piece of the product for customers to utilize. And like Bobby mentioned, our customer care team will actually proactively reach out to customers if they are eligible for that conversion. If the rate market turns and goes back down and that becomes a new market that we're in, you know, we have a team ready to go to take care of that and make sure our customers are well taken care of. None of our products have prepayment penalties. So on any of the loans we talked about, that it's the same across the board. Average close time, and keep in mind, this is that 30 to 45 days, that does include construction, which just typically take longer in nature, even for a one-time close. Our lot loans, or if you're buying, you know, a piece of wooded ground and utilize the land loan program, those turn times are much shorter, but that 30 to 45 days does take into consideration everything. And then lastly, you know, just on construction loans and the home loans, we do not require PMI, and it's a great perk for people, and we always have really positive feedback from folks on that piece specifically. So, you know, and like I mentioned, we're very heavy construction. So, and construction and home loans, that's the bulk of what we're doing here. Do a ton of lot loans as well. So, you know, and happy to talk to people about any of those different products.
All right, thank you, Anna and Bobby. We got a couple questions that have come in. The first question is a customer with a 40-acre almond operation in California. He's got 2 different lots. What are their options for how to qualify for a rural home loan in that situation?
Anna, I can take that one if you'd like. That piece of property would qualify them with, if they were wanting to build a home, we would consider them a part-time farmer, and that would be a loan we could do all day long. Typically what we see is if they are building on 5 acres or larger, it is a very doable deal depending on the type of home they're building. As Anna mentioned earlier, we do have some pretty flexible requirements on what type of structure it is. But as we move into different areas, we learn more about what types of homes are very common. So we'll lean on an appraiser in that area to help us determine if it's a conforming property. And in this case, it sounds like we would have no issue. 40 acres is enough land all day long for us to consider it a rural home loan.
Okay. Do you have any requirements for having to live in the home as a primary residence?
Yeah, I can take this one. So yes, we do. So the terms that we're talking about and lining out today, these are all for primary residences. We do have product solutions as well for secondary homes or vacation homes, but you have to meet certain other requirements in order for us to do those. Like for a second home, typically the only people who are going to be eligible for those are going to be if you're a part-time or full-time farmer.
Okay, thank you, Anna.
And if you have a specific situation too, I mean, we're happy to talk to people post webinar to answer specific scenario questions too.
Yeah, absolutely. This question came in based on your map. It looks like I am approximately 50 miles out of the green territory in California. Does that mean we don't qualify for a rural first loan? So I think they're referencing the map from one of the earlier slides. Yep.
Right.
Yeah. So it would probably be a case-by-case basis. That is something we'd have to look at on an individual loan level.
Yeah, so what happens in a situation like that? I'm assuming that in all likelihood, customers probably in the Ag West or the old Farm Credit West territory. Rural First would need to approach Ag West or the old Farm Credit West for territorial concurrence, provided that they were willing to give that concurrence. You come here then, or Rural First could then move forward with that home loan, but it would really be based on Farm Credit West or whoever the association is that has that territory as part of their service level area. So
that's exactly right. Yeah, we would lean on a territorial concurrence request to see if it would be an option based on the property location and loan type.
For the land loans, does the term open land imply arable? This is a customer asking from New Mexico where a lot of land is considered open but not necessarily viable for production?
Yes, I am glad this came up, and I thought it might. So in my recent trips to Colorado and New Mexico, trees look a lot different in this area than they do out west. So we may get oak trees here, for example, are 100 feet tall, right? But if you look in some of the higher elevation areas in Colorado, they're 6 feet oak shrubs. They're not tall. You can graze that property. We would likely consider that open ground. So if we're not staring at an actual forest, right, or it's actually being grazed or something like that, we're going to consider that open land. With your comment or the part of the question specifically about being able to produce, our eligibility requirements are a tad different when the farm or the ground doesn't have to be actually in active production for us to consider it to be able to generate farm income. It doesn't have to be in current production. So there's always the option of looking at it based off capability.
Great, thank you.
I hope that answers the question.
The next question is, are there any requirements related to occupying a property with an existing home as a primary residence within a specific time frame?
I can take this one. There can be. Like I talked to a gal the other day who was, she's wanting to move Colorado, but it was going to be like 2 years. Well, in that case, we're going to have to call the Kansas home a secondary home, not a primary home. And so she wasn't eligible with us for a second home type loan. She was eligible for a primary dwelling home, but not for a second home. So, those are just, like I said, it's probably case by case basis, easiest to talk through those because there can be varying factors. So give us a call. We're happy to talk through it.
Yeah.
Great. And this last question is, will Rural First take a second behind AAC for a construction loan, i.e. customer doesn't want to refinance their lower fixed rate AAC mortgage to get home construction financing?
I can take this one too.
So we cannot take a second to American Ag Credit's first lien. However, we have worked with American Ag Credit in the past on maybe doing a partial release for only the portion that we are going to be building the home on. So while we can't take a second lien, we can be very, very creative on how we can avoid refinancing that first mortgage. So there are options out there. And if that is a very loan, like if that's a loan specific question or property specific question, we can take a look at that as well. And I think you might have had some info to add there too.
Yeah, the only thing, because I've ran into that scenario as well. And for instance, yeah, most of the time we just talk to your ag lender and say, okay, what realistically do you need so we can both, make this happen? But we do have to be in that first lien position. If American Ag also does need pay down on the loan or something like that to do the release, we can roll that into the construction loan as well. But we're on the same team. American Ag and Rural First, we're on the same team, so we want to work together to make it work for customers.
And then the last question we have is, any limitations in California?
Bobby, do you want to take this? I feel like you're more in the loop on them.
Sure. So there are limitations everywhere, right? California, we are having to be more creative in order to finance some of those properties. And what I mean by that is, if you are a non-farmer, we have home limit caps, right? So we may have a amount that the home can appraise for that above and beyond that, we can't really look at that. So for example, and I can't remember the exact adjustment to the rural home limit, but if we have a home on 2 acres in a county in California and it appraises for $1.4 million, that could be difficult for us to finance. Not that we can't do it, but it might be a little, may have to be kind of creative. If they are already part-time or full-time farmers, or they have property elsewhere, that becomes a non-issue. So there are not specific to California requirements, but there are rural home limit caps that we have to follow. However, we do everything we can to make sure a customer qualifies in a compliant manner. So again, if there's specific properties that we're looking at, we can talk through those. But we have been very, very successful in helping qualify borrowers to purchase the home that they're looking at in California so far.
Great. Well, I think that concludes the Q&A. Thank you all so much for joining our Harvest of Value webinar series. We hope that you found this time well spent and an investment in your business. As mentioned in the chat, this presentation is being recorded and we will share it with all attendees within the next couple days. You can also access it at agloan.com/harvesting-value. We'll be sending out a recap with some of the key takeaways from the presentation as well. And if you want to get in touch with us about your rural home lending options, you can either visit agloan.com/ruralfirst, and first is in 1ST, or you can email the team at leads, LEADS, at ruralfirst1st.com. And be on the lookout for next month's topic. There's going to be a topic on commodity updates where our analysts are going to give a macroeconomic update, and we're going to have different breakout rooms for each commodity type. So we get to pick a specific commodity and learn more and get access to an analyst. So be on the lookout for next month's webinar. And again, appreciate your time and hope you all have a good rest of your week.